So, one of the concepts that we hear as investors and advisors a lot is this concept of a 52-week low or a 52-week high. And so, you've probably heard of that. The idea is that a fund or an investment that you're looking at has readily available when you search this on, Google, Yahoo, whatever your search engine is. There'll be a 52-week high and a 52-week low. And so, some things that investors do is they'll look at the 52-week low and say, oh, this is a really good time to invest in this concept, a mutual fund or whatever it is. And so one of the things that I want to just spend some time breaking down is when investing based on a low price is a good idea and when it's maybe a good idea, but you probably need to process some questions first. One of the concepts I want to look at is, why is the price lower? There are a couple of different things we need to look at. If the price is lower, for example, because of a short-term event. So a great recent example that we've probably all lived through is that travel-focused things were pretty low during COVID, because if you think about it, not a lot of people were traveling during COVID, right? And so, for example, if there were some investments that were travel-related and the price was lower during COVID, as an investor, one of the things that you would have asked yourself at that time is, do I think that this fund or this company or this investment could sustain getting through this? Meaning, yes, we're going through a hard time right now, but do we think that it is still overall a worthwhile investment? And so that would be an example of, yes, there's a 52-week short period or short pricing where it appears like things are on sale, if you will. Then yes, that would make sense. And here's the thing, it's kind of like buying a house. If the value is there, you believe as an investor, and if you can buy it for a lesser price, so again, kind of like a house, if I think a house is worth $500,000 and I can buy it for $400,000, I've immediately got $100,000 in equity, right? People think of investing as the same thing. If I think an investment's worth this much, but I can buy it for this, automatically you've got some value in that gap, right? Two things need to be true. You need to actually think you can get the value up here, and you need to actually think you can buy it up here, or buy it down here, and have that spread, right? You make money in the spread. The problem is, it is a very subjective thing of what is the actual value. And so that's where I come back to take, for example, that hotel and travel industry thing. If I believe the value's here, but because of COVID or because of any other world events, right? If I think that that's just a short-term thing and I believe the value will come back, I believe that the company will sustain itself, and I think that the world will begin traveling again, then yes, that lower price might be a good opportunity to invest in that area. But there are other reasons that companies can have lower prices, or that investments can have lower prices. Other examples are things like not an example necessarily, but a strategy is really looking at the underlying financials of a company. So the biggest ones are going to be revenue, obviously. But of the revenue, how much is flowing through to actual profit? So another reason that you might see a price fluctuation, or it might appear that something's on sale, could be that revenue was way up here, and maybe even revenue beat the expectations, but maybe the profit didn't follow suit. And so then you have kind of two avenues, and I'm kind of oversimplifying it, but at the end of the day, it can be pretty simple. If the revenue's here and profit does not support that, or profit, in your opinion, is not in line, it could be two things. One, is it just bad management? In which case, maybe that investment's on sale, but maybe it's being so poorly managed that the value is not there. And even if I can buy that fund cheaper than my friend did a year ago, it still might not be a good idea. On the alternative side, if revenue is doing well and the profit is not reflective of that, then the question is, again, is it bad management? Or maybe, especially right now when technology is so popular, maybe the profit doesn't reflect the revenue because they're spending money on research and development and getting the next big product to market. And if that's the case, one would know, because when you look at the financials, you can see where's the money being spent. If the money's being spent in a way that as an investor, you think that that spend is going to lead to future success, then great. Maybe that is a great idea. Here's the problem with all of this investing, right? And we all know this, but there is no crystal ball. I can look at, historically speaking, what's happened financially with revenue, with labor costs, with product development, with distribution, with research, with profits in general. But that, just because I have access to that information doesn't mean that's what's going to happen in the future. However, having access to that information can probably help you make more informed decisions in the future. And so again, I want to just be clear, I can't predict the future, but based on historical data, you can certainly feel a little bit more opinionated and more strongly about what you think is going to happen. So are the financials there? And if they're not there, why? And then is there a short-term something that's going on that we need to work through? And then the other thing I would think of is kind of in line with, is this just a short-term kind of like stumble on the road thing that we're dealing with? But sometimes it could be outside. Let's take the COVID example off the table. Maybe there's a product that was super hot, very, very popular, and so that was a very attractive investment, but now the price is falling, and that mutual fund or that individual company, if things are falling, then the question is it a product issue? And a product issue could be they're not keeping up with the times. Think about how many products we've seen in just the last 20 years that think are going to be super amazing, and you hear so much about them and everyone's so excited to get them. And a couple of things happen. Either it never makes it to market, or it makes it to market, but the demand's not there because maybe the product is too expensive. Maybe the product the quality's not there. The demand is just not there, or a competitor came in right behind them and it was a little bit more flashy. One of the things that I think about a lot is, especially with where we are as a country, oil prices are really high. Interest rates are higher than people are used to seeing them. Like buying a new house, your mortgage rate is certainly probably higher right now than it was several years ago. And so here's where that relates. When I talk about oil prices and gas prices and I talk about interest rates, what could be happening is there could be this really, really great product, but unfortunately, because of gas prices and the cost of my mortgage or my insurance is going up or other day-to-day expenses are so inflated that maybe this really great product I just can't afford right now. And so that as an investor, that's also something we need to look at is it the product is not great? Is it that the market's already saturated? Everyone already has this item? Or is it that, hey, people just can't afford to buy it right now? And so again, those are just things you need to evaluate when you're deciding if you want to buy something. I think the thing that I would leave you with is just because the price is lower doesn't necessarily mean that that's a good investment for you. So really do your due diligence and make sure that you're looking at the why behind the numbers, because I think that will lead to a lot of consideration and it leads to a lot of inward looking deep dive thoughts on, it's kind of like this saying, I don't know if you've ever heard it or not, probably, but my mom always said she'd hold up two shirts and she'd say, which shirt should I wear, the red one or the blue one? And what she said is, when asking that question, she didn't really care whether I would have said, hey mom, wear the blue shirt or the red shirt. That wouldn't have made her decision. What would have made her decision is when she said, hey Christina, should I wear the red shirt or the blue shirt? She knew in her head what she wanted me to say. So like if she said, I hope she picks the red shirt, it didn't matter what I said because her having that thought, I hope she picks the red shirt, that told her she's wearing the red shirt. Same thing with investing. If a price is low and you're looking into it, you're looking and you're having this internal dialogue with yourself of, gosh, I hope it's because XYZ is going on, or I hope it's because they're just researching and developing. You're kind of telling yourself what it is. You're talking yourself into it or you're talking yourself out of it. Again, none of us have a crystal ball. None of us know what's going to happen. And certainly a lower price could be a good opportunity, but just make sure that you are very confident in why you're making that decision. And probably a good idea to be realistic with yourself about how much you're willing to invest in that area. Because if it is something that is speculative or volatile, while you're looking at lower prices, still maybe just think through how much am I willing to invest in this arena, because it might be that you still want to invest, but you maybe are just not going to invest as much capital in that area because there are those underlying questions that need to be resolved first.